Hello and welcome to the third quarter video podcasts of the New Jersey Bank Marketing Committee of the New Jersey Bankers Association. I'm your host, Steve Lubetkin from ProfessionalPodcasts.com. This program was recorded December 4th, 2008 in Clark, New Jersey, and is the first of 3 video podcasts from the fourth quarter series. In this program, Kevin Cummings, the President and CEO of Investors Savings Bank, discusses investors' savings and its role in the New Jersey banking industry. The program runs about 44 minutes. For information on New Jersey bankers, visit njbankers.com. For the Bank Marketing Committee, visit njbankmarketing.com. Now let's go to the lectern where Dennis Kane of Amboy Bank will introduce today's program.
First, I'd like to thank our sponsors. I'm sure many of you have met them, but if not, we'll have a break. And the sponsors are really the people that allow us to bring these meetings to everyone at a reasonable cost. Some of the original sponsors, by the way, this is our 20th annual forecast meeting. And what I'd like to do is, 20 years ago, Jerry Nussbaum got together and he said, you know, for bank marketing, we have to run over to New York or go to Philadelphia, and there's really no place in New Jersey to have meetings. Why don't we get a group of people together and see if there's any interest in having meetings? So I'd especially like to thank Jerry Nussbaum, who's here today, who really is the person who thought about this. The other remarkable thing is that we also have 2 members of the original group. Dave Block is sitting next to Jerry, one of our original meetings, and Jerry Lind. And I guess anyone who's come to our meetings, Jerry Lind, since the very beginning, has probably worn so many hats. Jerry takes care of our communications, he takes care of the registrations, he arranges for these meetings, he virtually does everything. So we're very fortunate in having a really group of dedicated people who have been hanging around this long. So if anyone else is interested, we're looking for some younger blood to help volunteer. We're a volunteer organization. We really don't require membership. All we want to do is hold meetings like this. So we're looking for new ideas and new people to get involved. And also, if anyone has any suggestions for topics, we're wide open for next year. Also like to thank Steve Lubetkin. I understand, Steve, you've been doing this for 4 years now. Right. And Steve records all of our meetings. We started off doing just audio, and now we film everyone. And since we had the podcast, we decided, well, what do we do with those? It would probably be a pretty good idea to have a website. So we have our own website, and it's njbankmarketing.com. And if anyone wants to go to that site, you can see the meetings for the last 4 years. And the last few years, we actually have them filmed. So if anyone's interested in podcast services, please see Steve after the meeting. I'm sure he'd be more than happy. A former banker. Everyone's a former banker or a present banker. Unfortunately, more former. For the mailings, we send our meeting notices out through mailings and through email. So if you'd like to receive something by the email, please leave your business card with Jerry Lind, and we'll get you on our email list. Yeah, as I was saying, we've had forecasts, and 20 years ago, I was looking at some of the original members that were part of our committees, and it was the Howard Savings Bank, Midlantic, First Union, Summit, UJB, New Brunswick Savings Bank, City Federal, and you can go on. And back then we said, gee, I wonder what will happen next year. This year, we approached our speakers probably way before the beginning of the summer, and we said, we're having an annual forecast meeting. Would you come and speak to our group? And little did they know the extraordinary times we would be having and what happened since then. So we're extremely fortunate today to have 3 excellent speakers. And it'll be fascinating to see what they think is going to be happening next year, because I certainly have no idea. But that's it for our commercials. What I'd like to do is now introduce Jane Gore, who's our program chair, to introduce the speakers. Thank you very much.
Good morning, and before we go too far, I think we owe a lot of thanks to Dennis, because he also is part of the glue of that original. It's Jerry Dennis. That came along a little while after. Yeah, I hope you all brought your what are those called, crystal balls? There are days that I turn off the radio and I turn off the television, because I don't know about you, but I've certainly had enough. Oh, I just see Mr. Horn is here. Good morning.
Good morning.
I'll still go with Kevin first. Is that okay? So I'm going to introduce Kevin Cummings, President and CEO of Investor Savings. He was appointed President and CEO of Investor Savings Bank in January of 2008, and he was also appointed at the same time to serve on the Board of Directors. Previously, he had been an Executive Vice President and Chief Operating Officer with Investors since July of 2003. Prior to joining Investors, Mr. Cummings had a 26-year career with the independent accounting firm KPMG, where he had been a partner for 14 years. We just shared a lot of, as you go back in banking, particularly UJB and Summit days for myself. Immediately prior to joining Investors, he was an audit partner for, did I already say that, for KPMG Financial Services practice in their New York office. Mr. Cummings also worked in the New Jersey community bank practice for over 20 years. He has a bachelor's degree in economics from Middlebury and a master's degree from Rutgers, and he's a member of the Board of Governors of the New Jersey League of Community Bankers. Kevin, come on up.
All right, good
all the
morning.
changes that have gone on in the banking industry. And I look at the clients that I've had over the years, PPAC, Gladstone, Provident, Hudson City, Valley, American Savings, Atlantic Stewardship, Ocean First. These are banks that I've worked with firsthand and seen them grow and are doing, very well in this environment. And then, over the course of my career, and I made partner in 1989. And when was the last major real estate crisis? All right, I made CEO January 1, 2008. When's the next real estate crisis? So if I change careers, all right, and I go to another company, short that stock, all right? And I mean it. It's unprecedented, the times that we're in right now. Another banker once said early back in the summer, it's not as bad as '91. Well, I think I think things have changed a lot since July, and things have gotten 10 times worse than where we were. And you got to remember, this started probably back in 2005, 2006. With the height of the interest rates were down for an extended period of time, the refi market, the subprimes. But here in New Jersey, probably the first big developer to go belly up, other than Dweck, which was a different situation, was the Cara company, the Cara situation. And we had 2 loans in that particular situation, and luckily we were able to work it out. But really, I think the comment earlier, stop reading the papers, stop watching CNBC, stop watching Fox Business. The financial markets worldwide are in a mess. It was too many companies, too much easy credit. And what was the basic cause? What was the basic problem? It was mortgages. Single-family mortgages, the safest asset in the bank portfolio. And that's what caused this mess that we have today. And it's going to continue. It's going to be for, a good number of years. Now, what we see in the particular markets, the national banks are certainly pulling back. I got a call yesterday, a customer looking for a, commercial real estate refinancing. Bank of America and some of the other national banks. I don't want to mention any names, but you're seeing a lot of the national banks pulling back. Their exposure and capital concerns are the primary reasons for this. What does that mean for banks headquartered in New Jersey? It's a tremendous opportunity. A tremendous opportunity. And let me give you a little bit of background on how we got where we are today. 5 years ago, when I joined Investors, Investors was a bank. It was a very risk-adverse institution. It was about $5 billion in assets, and 80%, more than 80% of its assets were in mortgage-backed securities. More than 40% of its funding came from Wall Street, the Federal Home Loan Bank, and other borrowings. So when I looked at it, it wasn't a bank. It was a hedge fund. It was a fixed income hedge fund. And what happened, the company began to expand in that 2000-2003 period, and increased the number of branches, probably from 35 to 42, and increased its overhead. And as you became dependent in a risk-averse environment, it's a great place to live, but you have to be like Hudson City and have a 25-26% efficiency ratio. And investors treated it, didn't have that efficiency ratio. So when the new president at that time, a fellow named Bob Cashel, came in, he made the decision, and it's kind of like we had a strategic planning meeting over in Baltusrol in October 2003, and he said, we can't go on like this. So we met with the board, and we created a plan, and we're going to take that $4 billion of cash flows coming off the mortgage-backed securities portfolio and transfer it in loans. And that's what we started to do during that period of time. Investors is certainly going to is a transformation story. All right, it's someday it may be a Harvard case study, whether we're successful or not. Because the biggest issue, anyone can change the direction. You can change the direction, get into residential mortgage, you can buy packaged loans, you can do that rather easily. But the real issue was changing the culture of the organization. And that cultural change was the major challenge that the new management team faced. When you looked at the workout of the employees of our branch staff, first off, we had no marketing department. All right, the head of retail was the former auditor, and that's what it was. Actually, the company has always been run by a CPA, almost, except for Bob Cashel. But I mean, it was a control-based, operationally focused organization. And during that period of time, a good day for our branch manager would be get in at 8:30, be home by 4:30. If you didn't have a defalcation or a customer complaint, it was a good day. And we had wonderful people working at the bank. All right, but you say the word sales. I had a comment in introducing one of our new regionals. A woman said to me, one of our sales managers said, if I wanted to do sales, I'd work for an insurance company. And that was the thought process at that point in time. Today, we are a $7 billion bank with 52 branches, with the third largest bank headquartered in New Jersey. And it's really been a wild ride over the last 5 years. I probably had 4 jobs in the last 5 years. Coming in as the COO, but working on accounting issues that we had initially, working on the IPO, probably functioned as a CFO. I ran retail, and now I'm getting much more involved in the commercial real estate and the commercial lending. Thank God for having all of you as bank clients over the years. I spent so much time looking at credit files. I almost can walk the walk and talk the talk, but they still don't give me any credit authority because they don't trust me. But when you look at it, in 2003 we did our strategic plan. 2004 we moved our corporate headquarters. 2005 we created a commercial real estate group and we did our IPO. 2006 we started hiring what we call business development officers. And the idea behind that was we had a good group of people as branch managers, and we had regionals coaching them, but we went out and hired these business development officers, 8 of them, to coach and team with, I call it the nun theory, going out in twos. And when they made sales calls, they could coach and mentor the branch managers. So we have a good group from many banks. You probably know some of the people they came from PNC, all the major commercial banks. And then just recently in 2007, we announced a small deal with Summit Federal. It's kind of interesting. And for you, I don't want to talk accounting here, but it was the last pooling of interest in the history of the SEC. What we did is we merged the mutuals at the top of the house, 2 mutuals, and we got a 5-branch operation for no consideration. We didn't pay anyone. It was just a merger of 2 mutuals. So that was a wonderful transaction. And in 2008, we rolled out our business lending program, and we had partnered with Wells Fargo. We were able to give a $100,000 line of credit using Wells Fargo. They retreated from the program, and we brought in 4 lenders, from the commercial banks, some from Valley, some from the old UJB, Sovereign, and we started that business lending, unsecured lending, which really makes our board nervous, because that's really stepping out there in the away from that collateral and collateral-based lending. But of all the stuff that we've accomplished, this is the most important thing. This mission plan and our mission and vision. And I read a book once that talked about leadership, and they said, well, if you're leading and no one's following, you're just taking a walk in the park. And when you look at what we're trying to do, we're trying to create our mission and our vision. And when I was at Pete Marwick and we went through this change years ago in the early 90s, and remember when they started selling all the consulting services, I was at a partners meeting, one of 1,500 partners, and the fella, this guy Jim Brocksmith said, you either get on the train or the train's leaving the station. In this type of situation, we've taken not that type of approach. We use the term, it's evolution, not revolution. And we're trying to do it in a kinder, gentler way by winning people over and getting them on, asking them to join us on the train. In developing this mission statement and vision, the most important thing that we kind of talked about was our core values. And we call them the 4 C's. It's character, cooperation, commitment, and community. And really, when you look at that, when you have core values, and I don't know, how many, does every bank here have core values? Do you talk about them at every meeting? Do you talk about your vision and mission statement? And, we have a weekly call with our branch managers that I participate with, and our business development head participates, our head of retail participates. And we talk about what things we're doing in the community to serve others. I guess when you look at these core values, how would you rate them? Because that's another thing you need to do. You got to rate them and prioritize them. Any thoughts? What do you think the most important one is? Commitment? If you knew our bank and our board of directors, I would say commitment, hard work, and stuff like that coming out of Pete Marwick, but it's character. That's the first one. Character and reputation. Because investors always, it wasn't known actually out in the public space, but within the banking community, it always had a tremendous reputation, going back to Rolly Lewan, who was at the bank, and his father before that, going back 40 years. And then commitment, and then cooperation, and then community. And I think, when you look at that, and this is kind of indicative of what we look at in regard to what's happening out there in the marketplace, what C is missing besides Cummings?
Credit?
No. One that, is up there a lot, and I think, and it's in conflict with cooperation. Communication is one. That's one we talked about. But this other one is competition. And, people say competition brings out the best in you. This unbridled capitalism, brings out the best in all companies. Well, look what we have today. And, we're at the end of the year now, and we're talking incentive pay and doing our planning for next year. And really, the whole incentive pay issue and the whole transaction process has really caused a lot of the problems we have. I mean, I'm looking at our lenders now, and should I be giving them a volume goal for next year? Each lender, our mortgage originators, we have 35 mortgage originators. Should I be giving them a volume goal. Because this unbridled competition and this unbridled incentive pay is really one of the problems that we're facing today and one of the causes. When you look at, what's, the mission, once you get the mission and the core values, and when we, in January of this year when we rolled this out, we went and did town halls meetings with every employee in the first 90 days of the year. We met at the branches at night, with 20, 25 employees. We met with the corporate, we met with the mortgage company, and we did that in the first 2 months. In September this year, we got everyone together over here in Edison, and we had just a rollout party. And quite frankly, our Christmas party, our holiday party is coming up. But we probably had a better time at this rollout mission statement than the Christmas party, because the rollout was unexpected. They thought we were going to announce some kind of reduction in force. And when they came there and we had this, it was just outstanding. It was an outstanding time, and it really, the communication builds up the teamwork in trying to put together an organization. The people part of the business, it's the most important thing, especially in these times. The relationships that you have with your customers, with your developers, your loan customers and things like that. Know your customer, KYC, is the most important thing. When I look at our business today, when we're discussing this, what we're going to talk about today, the CEO, the COO, CFO, Chief Lending Officer, the head of retail banking, the head of business lending, the head of bank operations, a new BSA officer, information security officer, our new head of technology, a new marketing department, a new head of marketing, government banking, and a new head of training are all new to the bank in the last 5 years. So we've completely changed, the face of the team. The top 5 people running the company, the average age is 48 years old. The loan operations, residential lending, HR, facilities, audit, and compliance. They're the holdovers from the prior management. So it's probably about 2/3, 1/3. And that's the mix of bringing this group together, and getting people, to work together. The different cultures, the attitude of, well, if it was sales, I don't do sales. I'm a branch manager, I don't do sales. Well, one of the things we could have said, well, I wasn't hired to do that. Well, if you don't gain those skills, that'll be the reason you get fired. We didn't say that. We invested in the people. We did, through the New Jersey bankers, we did the branch manager certification program. A fellow from Michigan came in and did 3-day programs. We invested in Ritz-Carlton. We had Ritz-Carlton come in twice and do seminars. Omega, anyone here work with Omega? A group out of Pennsylvania came in and did all sorts of training. And that's why when you look at the training, making that move with the head of training, and that's something we did a year and a half ago, that was probably the most important move that we made. When you look at our retail bank, we kind of break up our bank into 2 banks, the residential bank and the commercial bank. Our residential bank today is about $6 billion, $6 billion of the $7 billion. And we've kind of, been flexible and seized some of the opportunities in the marketplace. When First Horizon spun off its mortgage company to MetLife, we were able to hire about 17 loan originators back last spring. And our volume, despite the slowdown in the market, has increased significantly over the past year. If you look at the retail bank, 3 years ago, we did not have business checking. All right, if you came in and wanted to open up a business checking account, we turned you away. So when I got there, well, we got to have business checking. So I'm ready to dive into it, and it was right at the height of the BSA problem. The money laundering, anti-money laundering, and all that stuff, right after 2001. And then you have to go out and hire a BSA officer, even before you have the product. So, and that relates back to our risk management processes. And then when we made this transition, I didn't want our branch managers talking to CPAs, CFOs, public companies, and things of that nature. So we created a not-for-profit account. because we saw the colleges, the charities, the churches, the synagogues, places like that as an underserved market. So we goosed up the rate, you charge an interest rate on a not-for-profit account, and we were able to, generate small successes and build the confidence of our branch managers over that period of time. And then with some recent acquisitions, we've seen another opening in the municipal space. Board of Eds, housing authorities. Some people might call it hot money, but we're out there, working the conventions. We had 5 people down in Atlantic City during the League of Municipalities this past, I guess, 2 weeks ago. So we're out there in the marketplace, and for this, every victory, every small victory, is a wonderful thing, because you're seeing the growth of your employees. You're seeing this change right in front of you, and you're seeing it happen all the time. Now, I said earlier we started our commercial business back in 2005, which was right in connection with our IPO. Today, we have a $1 billion commercial bank in 3 years. We have a lending limit of $120 million based on our capital, but we have a house limit of $25 million per transaction and $50 million per loans to one borrower. And in looking at that, it's scary. Like I said earlier, what was the height of the housing market here in New Jersey? It was 2005. Well, right now we have a $270 million construction portfolio. We have a $220 million multifamily portfolio, and the rest of that $700 million is in, do the math, it's in commercial real estate. And although it's in regard to our capital base and our asset size, it's not a significant exposure. But when you think of the risk mindset of this organization, it's a major concern. It's a major concern. And it's not going to get better. It's going to be a tough 18 months. So what makes us different in the marketplace? Certainly we're a local bank. We don't, we tell our customers, you don't have to make a long distance call to get senior management. Our lending authority, we're a community-based bank, but we can make big loans, $25 million loans. And I just saw the ad, actually, there's been a couple ads in the paper with Valley National, with my former client, Jerry Lipkin, talking about safety and soundness and, lending criteria, lending standards, and things like that. And I kind of laughed, because usually we had both those ads out there. They had my picture in the paper, and everyone thought it was John McCain. So my friends, here we are. All right? What do you think? Do I look like John McCain? Come on. Don't laugh, because in one of the branches, they had to take it down because it was in Essex County, a Democratic county, and they're saying, "What do you got McCain up there?" Back in Tom's River, they were saying, how'd you get McCain to support your bank? So, depends where you are. But when you think of what, we want to create a values-based company, dependent on our core values, that is a different bank that makes a difference in our communities. And if you look at that and you say, how did we get there? I think our defining moment was the Paper Mill Playhouse. And when you look at the Paper Mill Playhouse, that was a loan that we made under trying circumstances. That was a classified loan the day we signed the papers. And when we made that loan, I guess it really distinguished. It was a statement by us that we're here to help a neighbor. And over that period of time, since 2005 till today, between the foundation and the bank, we've probably donated over $600,000 to help that organization. Maybe it's to pay the interest on the loan, but no. But luckily, the city took us out recently and bought the real estate, and they're doing a sales leaseback. When you look at that, when we build our brand out in the marketplace, when we look at the things that we've done, they haven't all been successful. We hired a company out of New York, Sequel, and we went through a whole branding process. Probably spent $200,000 with this group. Great group of guys. But as we moved along, we were looking at a name change because we're kind of hung up sometimes in the bank with this savings, and it really isn't. It's what we were, but it's not what we aspired to be. Because we aspired to be the largest community bank, headquartered in New Jersey, serving New Jersey. And we always were, you know, wrestling with this savings. So we had a whole bunch of names. And actually, you know, like everything else, it got ahead of itself. And, you know, branch managers were talking about it. You know, everyone was talking about it. It gets to the board. And we didn't really communicate it to our board as well. Well, when it got up to that level, they weren't ready for the change. And so we knocked it down. But the work that we did in pulling this together, the focus groups and things of that nature, I mean, we really spent a lot of time doing it and trying to really identify, I think was well worth the money. Because it certainly got us focused of who we are and what we are and where we want to go. And I think what we want to do is be different. You know, we inspire, we encourage our employees to be active in the community. You know, whether it's the St. John's Food Bank, we asked them to sign up. You know, our mortgage company was going there every Wednesday throughout the year, not just when it feels good around the holidays. Well, we've gone and we're signed up 2 Wednesdays a month, all year round. A dozen, 10 to 12 employees going to the St. John's Soup Kitchen in Newark. And that type of participation is what I tell people, you know, when we have this foundation. The foundation has given close to $3 million away in the last 3 years. When I talked to them, I said, anyone can write a check. All right? Matter of fact, most of the larger banks can write checks a lot larger than we can. But you have to be involved. You have to be a leader in your community, a leader that serves others. And one of the things we ask them all the time is, are you a leader that serves or a self-serving leader? And, you know, having come from a large, you know, being one of 1,500 partners at a large international accounting firm, I've worked with a lot of self-serving leaders over the years, and I know what it is. And we're trying to change, you know, get people to think of others first. We're out looking at the deals. You know, we don't have to have the last nickel of every deal. You're discussing an acquisition, you don't need. You act fairly, and you'll be rewarded. When you look at the people, you know, getting back, you know, the people, you know, like I said earlier, our people are our best assets. You know, we've probably hired 50, 60 people. You know, 26 of our branch managers right now, over close to 50%, are new to their job in the last 3 years. We did that without a firing. We had a small early retirement plan where 9 people took it, and 3 of them were branch managers, you know, over 55 and stuff like that. But that's 9 people. Some people left because of, you know, internal control mishaps and things like that. But for the most part, we've kind of moved people. They've either taken pay cuts and stepped down and become operation managers or moved across. But not everything's been well. We've had a couple branch managers we've hired and they've left in a year. You know, so you have to be very careful in your hiring practices and looking at what you're doing. We've had 2 people in significant positions that have left the bank. One mostly on the retail side. So, you know, it's been, you know, we've had some bumps in the road. The one thing I think, these opportunities that we're going to have now, seizing the opportunities and being flexible. You know, right now in New Jersey, you know, what's going on in the marketplace, there's tremendous opportunities. All right, we have grown our core deposits over 30% in the last 2 years. We have grown our loans over 40% in the last 2 years. You know, we have grown from 5.8 billion to over 7 billion in the 9 months of 08. And quite frankly, you know, we're a little concerned. I picked up the paper this morning and you see the mortgage, you know, 4.5% mortgage. I don't know, you know, who's going to fund that? You know, is the government going to give us non-interest bearing deposits, earn a spread on that? So, you know, when you look at some of the things going on, it's a little scary. We didn't accept the TARP money because of our 20% risk-based capital and 11%, you know, Tier 1 capital. And it's going to be, I think we're projecting, not the same growth we had last year, but a good level of growth for the year. And I really don't want to say that because I'm on the film here. I'll put that on the thing. But one of the things, maintaining being good stewards of capital. I think we all have to be, in the banking industry today, good stewards of capital. And when you think of our ownership structure, we're 40% owned by the public, 60% owned by our mutual parent. And we have the ability to do what they call a second step, similar to what Hudson City did. And that valuation runs from, $800 million to $1.2 billion. So our plan over the next 3 years, Wall Street gave us $500 million back in 2005, is to leverage that capital to 10 to 12 billion. We have the management team in place to do that right now. Once we hit that 12 billion, we're going to have to tear it all down and start over, because you're a different company when you go to 12 billion to 20 billion. Those of you who've worked at UJB or Summit have seen those changes and how the company changed over that time. I worked on UJB from 1987 till it was sold to Fleet, what was it, 99, 2000. And you saw the change in that organization. When it became, Pennsylvania, Connecticut, and a New Jersey-based organization. And one of the things, being good stewards of capital, it's a three-legged tool. Stock buybacks, treasury stock transactions, de novo growth, de novo branching, growing the balance sheet through loans, and acquisitions. And I think over the next 18 months, there's going to be quite a few opportunities for acquisitions. I think the big issue out there is the pricing and the realization of where the pricing is, especially in these turbulent times. What makes banking different here in New Jersey? I think it's really it's a people business. It's a relationship game, and then when you look at that, it's very important to have access to decision makers. A quick no is better than a long drawn out yes. I mean, you have to, when you're dealing with, actually, I'm not Dr. No. People call me, branch managers say, well, call the president, you'll get a good rate from him. And then I have my CFO yelling at me because, I'm giving away a CD rate or a decent loan rate. But I'm of the view is we're growing the business. Our earnings do not matter. We're a book value, tangible book value play right now because we're valued on the second step. And when you look at this, we want to build an organization. Back when in my Pete Marwick days, the consultants used to say, I'm building, I'm growing, I can't be profitable. Well, I haven't used that yet, but certainly I know what they were saying now. And when you're trying to build an organization, it's difficult to control both things, especially in these times when we're worried about the credit issues. I think as larger banks retrench, because of capital concerns, it is a tremendous opportunity, for banks here in New Jersey. The 3 C's, when we talked about, we have the other 3 C's, I think the credit issues are going to become very significant. Back in the 80s, like I said, back in the early 90s, I was a young partner, and, I worked on the first bank to fail in New Jersey, Elysian Savings Bank in Hoboken. Ernie Badaracco. I went to school with his son. And after every one of those banks failed, whether it was Suburban National, Mid-Jersey National, I knew them all because hometown bank, I was the young partner, so they used to call me the C&D partner, cease and desist partner. Worked with Jim Hughes on a couple of them. And an FBI agent would come to Short Hill's office of Pete Marwick, very casually show me his revolver and interview me. Nice Tom Dooley from Fordham University. But, it was very troubling times, and I think, we're going to see, we're certainly seeing that in California and Florida. You're going to see it in Atlanta, you're going to see it in the Midwest. But I think here we're positioned in pretty good shape, And, I went through some numbers yesterday at September 30th. The banking industry is healthy in New Jersey, and there's going to be a tremendous amount of opportunities. So one of the things you got to stay focused on in the future is the 3 C's of credit, and that's cash flow, collateral, and character. And stick to the basics, keep it simple, and develop relationships. And then one thing, staying committed to our core values is to, do it be humble, look for your situations. The fact that I didn't win the award last night didn't bother me too much, New Jersey Biz. It gives us another opportunity to work harder, and I think it's a great opportunity, I was at a hospital function and the silent auction recently, and there was a plaque, and it was Joe DiMaggio. It was a quote from Joe DiMaggio. And I thank God every day for making me a Yankee. So I bought it, and I'm going to bring it over to our marketing guys, and I'm going to get it. I want to put it right above the door, the entrance to the bank on the way out, and say, I want to thank the good Lord for making me an investor's employee. And sort of like the Notre Dame play like a champion today, I'm going to make sure everyone hits it on the way out. So that's what you're doing. And in conclusion, capital is king in these times. All right, you're going to see a consolidation in the industry. The stronger players there's going to be some consolidation. You're going to see continued change. You got to remake yourself all the time. Be more creative in the marketing. Be more creative in your sales approach. Encourage your employees. Give them good incentives. Treat them well. And as you look at things, the cost control is very important. But treating people, if you have to do something on the cost control side, do it in a kind of gentler way and treat people with respect. I think that's it. That's the comments I have. I hope I keep my hair over the next 18 months, because it used to be black in 1990, and it went gray in the early 90s. I'm just hoping to keep it over this recession. It's probably going to be a good 18 to 24 months, and but if you have capital and you have a good business plan, there's going to be a ton of opportunities. These opportunities are unprecedented for a healthy organization. Thank you.
We hope you enjoyed this presentation by the New Jersey Bankers Association's Bank Marketing Committee, produced by ProfessionalPodcasts.com. For information, call us at 856-751-5491 or send email to steve@professionalpodcasts.com. Thank you for joining us, and we'll see you out there on the net. Take good care.